Alright everyone, it's Josh Taylor and I'm doing the Forex Market Preview today for Trade Advisor Pro. And before we get into today's trades, we're going to keep this short today. I'm only going to go over a few pairs, but I want to show you a little bit more in depth of why we're taking some of the trades that we're taking. And I want to show you a trade that I took today on the Aussie New Zealand dollar. Now this was actually, right now it is 6:24 p.m. in New York time. This is a few hours ago. And right now we're looking at the Aussie dollar, New Zealand dollar 4-hour chart. And here's what I saw on this chart. And you can see some of the lines we've got laying out here are some basic support levels, support resistance levels. And you can see that on this chart since, let's see what is this thing to do? Oh, let's turn the Fibonacci off. That on this pair, since yesterday, this pair basically went into a sideways channel, and I'll tell you exactly why. The New Zealand dollar and Aussie dollar are both coming out with news today, and so basically, when there's huge news announcements, such as unemployment rates and statistics along that line, a pair tends to go into neutral, which is a great opportunity to trade, by the way. I mean, there was a lot of opportunity. If you can zoom in here, in fact, if you narrow this down to like a 1-hour chart, there was opportunity to buy and sell all the way through here. And if you've seen one of the other videos, we talk about trading in a channel. Here, you know, that's a great little channel to trade in. There's a lot of opportunities to buy and sell in here. So basically, here's what I saw. Oops, I lost my chart there. Oops, wrong one. 4-hour. All right, so what I saw here is that this pair had pretty much developed a nice solid base right around this level since yesterday. And let's actually thicken this up a little bit. It's a little bit too thick. And it was basically trading in this mini range until we knew that the news announcement was going to come out. And so what I was looking for on this pair was price was all the way right down here at this 12600 mark, and I saw an opportunity to go long on this pair. See if I could, and my goal was for this pair to basically run up here to this 12700 mark, and I expected this trade to run for 2 or 3 days. I put my stop at I can't remember exactly where I put my stop, but I put it at an 80 pip stop. Actually, no, it was a 60 pip stop, so I was right down in this area here, 60 pips, 50 pips, somewhere in that range. And so I had a nice stop, and my my risk reward ratio was 2 to 1, a little over 2 to 1, so it was looking solid. And what happened was, I figured worst case scenario, if the New Zealand dollar news comes out, very, very positive, it would go against my trade, and I'll close the trade early. I don't like getting full stopped out. I risk 1% per trade on my accounts, and I don't want to risk an entire stop 1% loss. I'd rather take a 0.3 or 0.4% loss. But here's what happened. Let's go back to Forex Factory. So I took this trade around 4:15, and right here, the original unemployment rate was previous that it came out was 6.8, and they expected 6.7, which is a better move, right? But even the New Zealand dollar against the Aussie dollar's been strengthening. I figured worst case scenario, even if it came out at 6.7, that this trade would still slowly work its way up, and it still stayed in this range. I'll at least close with a little bit of profit, right? Make a small profit and close the trade early. But what happened was the New Zealand dollar actually came out at 6 points, 0.6 points below the expected. So not only did it improve, it went up 0.5 worse than it was, but it was 0.6 difference between the forecasted and the actual. So the New Zealand dollar dropped like a rock. In fact, let me get to the New Zealand dollar, US dollar. Let's see, 1-hour chart. You can see what happened here. Boom! See that candle right there? Let me zoom that in a little bit. A candle was within a 1-hour time frame, right at 4:30. boom, we're talking almost a 100 pip run straight down. So what happened is my Aussie dollar, New Zealand dollar trade shot straight up, right up to my profit target. We closed that sucker out, and I made 100 pips on this trade in 30 minutes for a 2% gain on my account. So that was pretty sweet. Anyway, I just wanted you to understand what my thought process behind this. Now, my trade copier, my Mirror Trader Pro customers got this trade. We were in and out in less than an hour. We're about an hour and 50, right around an hour. I think it was actually a little under an hour. I did not send this to Pro Signals direct customers because the trade was happening too fast. But I actually got in before the news announcement. Price was hesitating in here. Even though I put my stop down here, my goal was if price broke below this nice little base, I was just going to manually close out around here anyway and take a 0.3 to 0.4% loss. But instead, the negative news against the New Zealand dollar, obviously causing the Aussie dollar or New Zealand dollar to shoot through the roof, gave me a nice juicy boost. And there we go. A 2% run on that sucker. So let's get into analyzing a couple of our pairs that we're looking at here. Let's start with the Euro USD, and I'm not going to do a lot of pairs today, but I want to get a little bit more in depth about what I'm doing and to give you a more detailed idea of how to really dig deep and analyze into these charts a little bit. First of all, under Euro USD, and by the way, I have not looked at these charts over the last few minutes, a few hours actually. I guess it was a few hours. I had an idea on a trade on the euro that I want to take. We're already short on this pair. As you can see, long term, that the euro has been pushing its way down, and just recently over the last few weeks, this is the weekly chart that right here at, right above 1.3, that the euro has really made a solid support level and is now slowly but surely working its way down. The next base is run 26.36 mark, which I'm expecting to run down to, and so that's the only. I don't trade off the weekly charts. What the weekly charts do for me is give me a little bit longer term perspective on where pairs are going. And you can see long term, this thing, the Euro USD is going down, but we're talking about this is years. Okay, this what you're looking at in this chart is 11 years. Okay, so or 10 years. Okay, so here's what we're going to do. That's the weekly chart. Now we're going to go to our daily chart on the Euro USD. And it's a little bit messy, so I'm going to try to interpret some of the things I did. The first thing I always do on any chart is I start drawing out major support and resistance level, key levels. And you can see there's one here. In fact, we had a double top here on this pair, but long term you can see there's some hesitation in this area. There's a bottom here right above 1.3 mark, and actually about the 1.3 mark. You see some hesitation in the area there. It's bounced off again. So the 1.3 level is a nice solid level. But most recently, in fact, you can see that we've had there's two different trends to look at here. Long term, basically, since, I guess this is March of 2012 until this point, the euro is actually slowly but surely working its way down. Okay, but if you look at since June, we have actually a small uptrend within this longer term downtrend. So let's back this out a little bit. Let's take this. Oh, you see it for a long time. This pair's been running down, but let's zoom this in. Actually, we can't really draw a fib level off that swing high. But here's what I did. First of all, I drew out key levels, because when we're taking a trade, we want to look at what's called a confluence of events. You don't want to just take a trade off of one single base unless it's a strong base. You can't do that, but the more key actions that happen, whether it's price happens to be hitting a pivot level and a top of a trend line along with a support level. If you can get, especially if you get 3 confluences on a trade, you have a better trader opportunity. So we noticed a couple days ago that price had been building this solid little base here at the support level. So we took a sell position right around here. In fact, it was around 28.30. We ended up selling. We ended up selling at 28.35 or 28.30 range, right around here. Okay, we took a sell, and yesterday, well, actually today, because my charts are set to change at 5 p.m. New York time. So this new candle is started at 5 p.m. New York time, an hour and a half ago. So price went up, took our trade in. It started working its way down. Now, it's still working its way down. But we had a hesitation on the hourly charts. I think it was. Let me go back here. Price really started kind of working its way up. Now, even though when price is working its way down on the longer term chart and we start seeing this upward consolidation, usually what ends up happening is you have a nice dry drop. But to lock in profits for my trade copier customers, I went ahead and told everybody to close out. We closed out some profits today when the price came all the way down to this level here. 50%. We moved our stop down below the break-even point, and which our original entry. By the way, if you look at our entry is 128.30. 128.29 was actually the weekly M2 pivot point, which has also created a solid little base here. And so price anyway started working its way up, and I decided that, you know what, this thing could bounce back up. I went ahead and closed out the profit on the rest of the trade, and now we're going to be looking for a re-entry. So let's look at our re-entries. Go back to our daily chart. What I can show you here is price has hit a really solid little support level. Remember what I've talked about before? Support becomes resistance, resistance becomes support. So this was support, support, support. When it finally broke through, now it becomes the new ceiling, the new resistance. So I'm going to be looking for a potential sell right in that area. Okay, 46-ish, 30 to 40 range. The only thing I can see what happened today in today's price hesitation, that price came down. I drew a Fibonacci from this upswing from here to here, from the swing low to the swing high, and price is sitting at a base right here at the 38% retracement. Now the 38% retracement isn't as strong as the 50%, especially on a euro and a pound. So I'm going to be looking for 2 opportunities here. Number one, this level in here, the 50% retracement. If I can get this thing to darken up. There we go. So can you see it? Yeah, let's move it up. Okay, this 50% retracement line here is going to be a good opportunity for potential bounce. You can see that there is it's a slight level. It's not a huge level, but it is a slight level. It happens to also be right around what's called the figure, 126.11. So I'm going to say 12600. So we're going to be looking for 2 opportunities on this trade, on this pair. One is I'm going to actually sell this pair again back at the 28.30, and because in fact, I need to calculate what the average true range is on this pair, but a good run up on this trade would shoot us up into the 28.30 range again for potential turn down, and then I would expect price to run all the way back down. I'd start closing profits all the way down, and I'd be looking to buy this pair again at 12600, but I usually buy 5 to 7 pips above that, so 2610 range, so right around this 2611 would be a good opportunity. So we got 2 potential trades sitting right there. We're going to sell this at 28.30. We're going to buy at 2600. Okay, now the 2600 I'm going to expect is going to be more of a small bounce. We'll probably take that directly off of a hourly chart when it comes to that point. Where are we at here? Yep, right. So we're going to take a sell position basically at this weekly M2 pivot, which happens to coincide on the daily chart that we just looked at with a nice little base we've been running onto. In fact, we took that trade already, so that's one little trade. Let's see here, the USDCAD, was I looking at something on that? Let's see, what USDCAD daily? Yeah, right now the USDCAD, and I'm going to come back to this. I got to spend some time really looking at this, but you can see that the USDCAD is really put together a nice little solid base at this 1.9 mark. It's really been running between that and 1.0100. We did have a nice little level hit right here. Let me zoom this in. This is a little too difficult to see. Okay, how does that look? Is it? Yeah. Okay. Right there. Now, I missed this trade yesterday because I wasn't paying attention to this pair. But if I would have been looking at this yesterday, I would have shown that 0.9900 has a solid base on this pair, and I would have taken this pair long at 0.9900 and ran this thing up for 100 pips, which right now we'd be up 60 something pips. I would have closed out positions and moved my stop up to let it either get stopped out in profit or hit my profit target. But I am expecting that this pair could really come back and hit this level again. So I'm going to kind of keep my eye on this over the next day or so and try to determine what level I want to jump in here. But it's basically range bound right now, and this is a good opportunity when a pair is ranging. But starting from let me see, June, the USDCAD has slowly but surely been working its way down. You can see that it was trending down, down, down. This is the greatest trend line. Eventually went sideways into a sideways channel and hesitated. Plenty of opportunity in here on small day 30 and 40 pip moves, 50 pip little runs, and then it basically broke out of that, and now we're going sideways again. So there could be a potential sell opportunity at the 1 level and also at 0.99 level. So I'm not sure on that one, but I know that was one I was looking at today. But here's another trade on the euro pound that I was interested in. And I'll tell you what I've done on this trade. The daily chart. You can see on the daily chart that the euro pound has been working its way up into a little channel, and this thing is definitely on an uptrend. And what determines an uptrend? You have higher lows and higher highs. You get a low, high. This low is higher than that low. This high is higher than that high. Right? Uptrend. This low again is higher than that low. This high didn't actually, it came to that level, right? Eventually it came down to a higher low and broke up to it did go to a higher high than higher low. So now if you want to look at this, it did go below this trend line, but we have created a solid base over the last few days. So what I've done is actually I'm right now, I just got into this position to buy, because I still think long term this is uptrending. I just think recently the euro is just kind of dumping off a little bit to kind of set itself back up for some potential long runs, but against the pound, that is. But it has created a solid base, so I have bought the pound right at here, right around the in fact right at the market's ad. I just did this like 15 minutes ago, and what I've done is put my stop below these this base right here that's created, somewhere down into this range here. And I think I don't know my exact stop that I put in here, but yeah, 79.20 right here. Actually, that's where my stop is. So I basically have got a 65 pip stop, but I'm looking for price to run up. My profit target is 81.50, but most likely this pair could hit the top of this trend line, or actually the bottom of this trend line, and have a bounce down. I will close some profits here for sure at 80.50 range, since that's been a key level anyway, and allow the rest of the trade to run or get stopped out in profit. So I'll close out 50% of my position here. I can move my stop up into this range here, 80-20, 80-25, and then let the trade either get stopped out with additional pips or let it continue running. But even though I have my stop down at 79.20, I am not going to allow this trade between where my entry point and 79.20. This pair has a 1% risk, okay? But I'm not going to allow myself to risk 1%. If I see this pair break down below yesterday's low, readiness range, 79.60 range, you know, if it comes down to that point, I'm dumping the trade. Okay, and at that point, I've lost 20 pips, so that's about a 0.32% loss, with an upswing potential of over a 2% run. So anyway, that's today's analysis. I just want to give you guys a quick update because I'm heading out the door. But hope you got some out of this, and we'll talk to you later.